This video will be discussing on the most recent crypto market crash and the strategies you can take to protect yourself from being slaughtered in the market. Just when we thought that Bitcoin will be reversing its course after it ends its 9-week losing streak, disaster strikes again. According to the latest Consumer Price Index report published on the 10th of June, the rate has increased 8.6% year over year in May. The biggest contributors to the latest jump in inflation were shelter, gasoline, and food, which are basic necessities that we normal people need in our daily lives.
I'm hungry! Me too, make something!
When the price of goods are increasing, it causes inflation. Mr. Market doesn't like this sort of news. The S&P 500 has fallen below $4,000 mark the second time this year, ever since 2021. Nasdaq has also fallen below the $12,000 mark, which is down about 28% from its all-time high back in November 2021. What about crypto? After hovering around the $30,000 mark for a few weeks, Bitcoin fell below the $30,000 mark at the time of recording. Other altcoins are not doing well as well. Ethereum, the second largest crypto, has also crashed more than 15% right after the report has been announced. People are suffering more losses after the initial crash caused by the Terra Luna incident, and now many others' account has been liquidated. During these difficult times, how would you protect your crypto assets? We'll be talking about it in today's episode.
First things first,
We need to know about the market cycle. After the enormous gains of Bitcoin from March 2020, the crypto market has reached its peak around in the November of 2021. At that time, investors around the world are in euphoria and many are using borrowed money while trading in the market. Then, the Fed stepped in to control inflation, causing panic in the market, and people started to sell all of their crypto assets. But that doesn't stop the market from falling further after the latest CPI report has published. So when the bear market arrives, what are the strategies that we can implement in order to save ourselves from this crypto bloodbath? Number 1, control your emotions and don't panic sell. Markets fall, and when they fall fast. It impacts us to be irrational and emotional. I know that feel because during the 2020 market crash, I was scared as well. I sold off most of my crypto assets at a massive loss and found out that the market rebounded pretty quickly within a few months. Although it seems extremely tempting to try to cut your losses when faced with huge price drops, it will not benefit us when the prices rise again. This phenomenon is known as
buy high, sell low.
At this time, you should assess your crypto's assets carefully and remind yourself why at first you have invested in these coins and tokens. After you have assessed your crypto holdings and your thesis still holds true, it is not the time to sell it. If the fundamentals of your cryptos has changed during this period, then you may need to cut off your losses. The second strategy is use your crypto assets that you have currently to earn passive income. No one person in particular can control the direction of the market. Rather than keep on thinking about it, why not spend this moment to learn how to use your crypto assets to generate passive income? For example, staking, lending, and saving interest are some popular ways to earn passive returns in the crypto world. You can do so with your cryptos in the crypto exchanges such as Binance, Crypto.com, FTX, Coinbase, and etc., as well as depositing your crypto assets in DeFi protocols such as Uniswap and PancakeSwap. These services pay out a wide range of interest rates from 2% annually, which is still higher than most of the bank savings interest rates, to about more than 10% per year. Higher risk options like yield farming and liquidity pools offers even higher interest rates, but it also takes into account the performance of the coin market. The third strategy that I would like to share is to avoid shorting the market unless you are super duper experienced in this field. If you're not familiar with shorting, it is basically a technique where investors use to profit from falling prices. If you have bought a crypto and the price of the crypto falls, the worst case scenario is you end up losing everything.
but
If you're short the market, your loss is unlimited if the market sentiment suddenly switches from bearish to bullish, because there is no limit to how much the crypto price will go up. This will also force your account to be liquidated, or even worse, owe a lot of debts. While you take a short position, some platforms or exchanges will also charge an extra fee for shorting overnight. Hence, you will need the market to fall significantly in order to get a profit from it. Last but not least, dollar cost average. When the prices of crypto drops, it becomes cheaper to own the same amount of crypto than before. So, what should you do? because it is on sale. But there's a catch. Only use this method on the coins and tokens that you have well researched on. Remember, always do your own research before investing because that's your own money. When you are buying small amounts of your assets over the period of time, this will average down your entry price and hence reducing your risk if the market falls further and increasing your potential gains if the market gets back up. So, which kind of strategy that you like the most? Or which other strategies that you are currently using when the market turns bearish? Share and discuss with us in the comment section below. Thanks for watching this video. Remember to like and share this video if you like it. Hope to see you guys soon. Goodbye.